Oh, that'd be sick.
I'm definitely going to find a reason to get out there.
Yeah, that'd be great.
I think they have hot tubs out in LA though. I don't think you have to bring your own.
No, you wouldn't.
But if you needed to bring your own, check this thing.
BIOH.
Check this thing out. All right, H. I might get one. I might get one. All right, should we start the show?
Good acquisition.
Let's go.
Yeah, let's go.
All right, let's go.
Swerving on these haters, I'm like Popeye on a spinach, double limb, yeah, we the team. Rose the captain, I'm a lieutenant. I'm the type to carry in $1 million cash and then grind like I'm broke. That Lambo, my new girl, don't ride like my ghost.
I'm riding around the city with my princess laughing at jokes. Cause these people want my bread, and I gotta make it back toast. Cause my fun need that real money.
Okay, welcome aboard, everybody. Looks like we lost Ben in that cluster. Oh, we got two Bens.
So excited and sideways.
Yeah, Ben's ruining the show. Okay, every morning I wake up and I watch the same YouTube show. Okay, from this guy named Lance Roberts. All right, Ben, you gotta meet one of your versions of you, buddy.
That's actually Trump trying to annoy.
Ben, you've been on this call for 23 minutes. Why did you just do that now?
I have no idea what happened.
1975, they didn't have webcams, so he's trying to figure it out right
Were you
now.
dancing to the song? You hit your webcam off or something? Okay. Anyways, Lance Roberts manages $2 billion. And I watch his YouTube channel every morning. And he does his technical analysis. It's getting hot in here. I got to say this shit. Okay. And he does his technical analysis.
There it is.
Yeah, there it is.
Homemade t-shirt.
All right, he does technical analysis of the market, and it's great. I watch it every morning. I didn't watch it this morning. Okay, this is the first morning in like probably 7 months I haven't watched it because I wanted to watch it with you guys. So we're going to watch it. It's 2 minutes, 3 minutes, and then we'll talk about it. All right, so he manages $2 billion. His strategy is very much rotational. So he buys in at dips, sells at peaks, and he reads momentum. He's been doing it for years. I think you're gonna be able to hear this. Fuck, I hope so. I'm gonna play it and tell me if you can hear it.
Are you playing it?
Couldn't hear it?
Nope.
No, we can't hear it.
That's tough. Okay.
Like on share screen, you can't? It doesn't.
Can you see it? Oh, it's not shared?
No, not sure.
Oh, okay. That's why.
Don, when I see your shirt like that, it just reminds me of Maze. Sweating. Maze nightclub, just sweating up and down.
I think this is from some night where I just had to rip it because I was sweating too much, and now I love it when I'm overheating. All right, you ready?
Ready.
I'm gonna tell me if you can hear it.
So this morning, it's of course Tuesday.
Fuck yeah! All right.
We can hear it.
We can hear it.
The show is saved.
Dads on Money. John Penn is here. Today we've got a couple things to get into. We're going to talk about earnings and markets. We're going to talk a little bit about gold. Got a lot of stuff to get into this morning, so stick around for that. Coming up this week, of course, today not too much. Yesterday, no economic activity really what to speak of. Today we have the National Federation of Independent Business, so we get a kind of a snapshot of what's happening with the small business side of the economy. But this week we do have CPI, which is going to be the next real important number as we start to head into the September Fed meeting. We had employment last Friday. That employment report came in at a negative 23,000. Not expected. They were expecting like 85,000 and came in negative 23. So immediately kind of a broad shock to the markets. Immediately killed rate hike expectations for the most part. But one thing to just note about that particular number is, and just to be honest, I haven't done a tremendous amount of digging into it, but part of that decline was also the end of the World Cup. There were about 50,000 jobs that were lost after the end of the World Cup. So there was some, look, let's be honest, right? The number wasn't great really kind of across the board, but there were some kind of anomalies with that data because of the World Cup. So we'll see kind of what that number looks like in the next month or so as we get into August and get the August report here. Into September and get the August report. So that's coming up pretty shortly. So we'll see if there's any kind of variation. But the bigger news to that whole thing was the negative revisions to the prior 2 months. So we saw not only a weak number, but also the previous two months were also revised lower as well. So the number was not great, right? The number was not great at all. Certainly does not suggest that the economy is roaring on all cylinders, and that job number is something worth paying attention to. But the more important number, and the one that everybody kind of glosses over, was wage growth. Hourly wage growth is actually declining, and that is disinflationary within the economy. So when you take a look at employment, always look at the wages, because wages are declining fairly consistently now, and that certainly suggests the economy is slowing down. That's more disinflationary, deflationary than inflationary, because as we wrote about before, if you go to the website, realinvestmentadvice.com, just type in wages up in the search bar. We did an article recently talking about wage growth as a leading inflation indicator. Wage growth is not pointing to higher rates of inflation in the economy. In fact, just the opposite. And that's something that is worth paying attention to, because if wages are declining, that means consumers have less money to spend, which is going to weigh on earnings growth for the S&P. And so this is very important to kind of pay attention to the interconnections. Earnings growth is very, very strong right now on a lot of different fronts, particularly for these companies. A lot of this has to do with what's been done previously, but we're now getting to the end of that cycle. In fact, we're going to start to see slower rates of earnings growth. This is according to the estimates by the analysts, that we'll start to see a reduction in the earnings growth rates starting next quarter. So as the earnings growth rate begins to slow down, that potentially weighs on market action as we go forward. Again, lots of exuberance in the markets right now. But again, kind of pay attention to that wage growth number. It's way more important than people kind of, like the media and everything else really doesn't pay attention to wage growth that much. Pay attention to it. It's a lot more important than you think. So let's talk a little bit about what you need to know before the bell this morning, and then we'll get into our conversation with John Penn. So last week broke out to all-time highs. We talked about this. That breakout to all-time highs bodes well for the markets. We've been this long consolidation. As we talked about on Thursday, there's two ways for a market to correct an overbought condition. That's either by declining in price or by trading sideways long enough to work off that overbought condition. We traded sideways for 2 months, broke out of that. That's bullish. There's no way around that. That's just bullish all across the board and suggests that the markets will be higher over the next 6 and 12 months. However, saying that, we've also had a very, very big move in a short time frame. So yesterday, we went into our portfolios and rebalanced our portfolios. We, for instance, Microsoft, which normally is about a 4.5% weight in the portfolio, grew up to be 6%. Just trimmed that back to target. We worked that across the entire model. So we rebalanced not only our kind of our 60-40 allocation model, but we also rebalanced things like our dividend income model, high dividend growth models, all kind of a lot of our thematic models from crypto to AI to infrastructure. We rebalanced all of those yesterday because of this big move. Markets have gotten back to extended pretty quickly, and we're back into overbought territory. So this doesn't mean that the markets are about to crash, anything like that, but there's a couple of things that are going on that as we move in closer to the midterm election cycle, that's potentially one reason. But the other reason that we really kind of went in and did this rebalance was primarily due to the volatility index. If you take a look at the VIX has collapsed to basically its lowest level that we've seen in quite some time. Very oversold here, has really been suppressed a lot. So there's no volatility risk. There's no fear in the overall market. Typically, when you get this oversold on volatility, this compressed in terms of the volatility index, and when you have this much complacency in the market, that's typically when you get some type of corrective action. So because of that, we just thought it was prudent to go in. Now, we're not reducing exposure by any stretch of the imagination. We're keeping our equity exposure in line. We just did some rebalancing for right now. The next step would be a reduction in equity exposure if we begin to see some further deterioration in the markets and the underlying internals. In our weekly newsletter, towards the bottom in our market statistics section, we have a chart called the Money Flow and Breadth Indicator. That indicator has now risen to 70. That's a very high level for that particular indicator. If you go to the newsletter, you can just scroll down to the bottom, you see the whole indicator. But that indicator is at 70. And we actually put this in the commentary for today. So if you read our daily market commentary, we've got an explanation of it. But that's at 70. That's a contrarian indicator by its own nature, because when it's showing a lot of money flow and breadth into the market, that's typically when markets are very bullish. So it tends to act as a contrarian basis. And at 70 to 75, that's where normally that money flow and breadth indicator peaks and you start getting a reversal in those flows. So that was kind of another reason for just going in and doing some rebalancing within the portfolios. Again, not reducing exposure here, not taking all our chips off the table and going.
All right, we're good there. Unless anyone wants to watch the end of it. I watch that every morning. I love the guy. So good. All right, so welcome to all the viewers. I'm going to introduce our guests, and then we're going to dive into the Lance Roberts review of the market, as well as some other fun topics. We got Ben over there. Ben, give a nice wave, a.k.a. Trump. We were calling him Trump before Trump was president, so long story, but he's a real estate legend. Ben, I'll let you give a little quick intro for the audience, since we're going to be doing this every Tuesday at 5 a.m.
All right. Yeah, my name is Ben. I live in Boulder, Colorado. Work in commercial real estate, buying and selling properties. We manage about 300 buildings. That's about it.
Awesome. And he still uses paper, as you can see by his office. Hemant, we got over there in the upper quadrant. Hemant, do you want to give a quick intro to yourself? He is DraftKings acquisitionee and currently works at Monday.
Yeah, H. Work at Monday, run a sales team here. Yes, Ben. Also bringing the strong British accent for Don's crowd, who I'm sure appreciate it.
Appreciate that.
Yeah, that's me.
All right, yeehaw over there, cowboy. How you doing?
Doing fine this morning.
You want to give a howdy do to the
Chase out here in Phoenix, Arizona. Call me the cowboy because I work in weed and I'm developing data centers.
Yes, you are. And all of you are accomplished in business. So that takes us to this first question. This is something I think about. All right, I think the market's so complacent right now. What do you guys think? Like way too complacent about everything happening with Iran. There's shit going on that doesn't seem to get reported. As he was saying, the VIX is insanely low, which is the measure of volatility. Normally when it's this low, it spikes up because of some reason. He was saying, we've had this return of the old economy where money's flowing into all areas of the market right now. There's a wide breadth of where that money's going. So it's not just the tech, it's also the Caterpillar, it's also the micro caps. It's also just like everything's getting money and going up. And he's saying, like, obviously that's very bullish, but on a contrarian basis, you should be taking the flip side of that because it's a 75, 80 out of 100 as far as money's just going in this wide funnel. So what do you guys think? Chase, you want to start us off? You have a good insight into this because you're doing the data center stuff, and that's kind of the heart of the economy.
Yeah, I mean, for me, what I'm reading is the money's drying up in the data center. That's actually the next thing that I'm kind of looking into, what that looks like and what that means. They just announced that NVIDIA just raised $500 billion from a lot of the top guys.
Saw that as well.
Mm-hmm.
And I think there's a lot of people that are that's a signal of like they're trying to gobble up what they can right now because it's running dry. As far as the market goes, I'm a little mixed. I feel like it's a mixed signal for me. It feels like it feels like in the market side, like the game on the field is different than like what's happening in people's lives. So I'm like, it's
Yes.
pretty confusing. So I can't quite, I don't know. I don't study it day in, day out to have like a real good insight into it, but it just feels like something's off there. There's not, like, the two aren't going in the same path. So
I agree with Chase. So working in commercial real estate, we lease to 900 different businesses. And we've never had this many businesses declaring bankruptcy or businesses trading. I'm
What do you
working
mean
on
trading?
five
You mean being acquired, or what do you
being
mean?
acquired, selling
Yeah.
because they're in default and they need to get out of their lease.
Do you have insight into, is that because they're a bad business, or are they just getting rolled up by PE? Because those are very different, negative versus positive.
I'm working mostly on the mom and pop level.
Uh-huh.
And
But are they going bankrupt so they have to get acquired, or is private equity just offering insane amounts of money because there's so much money out there that mom and pop are saying yes?
I think they're just struggling out there. I think the main street in America it's tough out there. And the market is, at its all-time highs, while, I think the boots on the ground, it's tough out there for a lot of businesses. And I think Lance mentioned like wage growth slowing. That just adds to the toughness that the businesses are facing out there.
But hasn't that wage piece been a factor for quite a few years now? Like, I mean, it's the same in this country, in the UK. Wages are not growing at the rate of inflation. That's been the case for the best part of 15 years. Yet the markets don't reflect that, and they haven't. They just keep astronomically rising.
And like Chase said, I don't think the markets reflect what's actually happened out there because it's inflated with AI.
Who else thinks the markets are a bit of fugazi?
Yeah, I mean, it's why I brought up the topic
not
as
real.
the first topic. So obviously, it's obvious, I think. How much of that is because Wall Street loves Trump? Like that's almost what it seems like is going on. Is Wall Street's like, don't worry about it. Like this isn't going down. We're fine. It'll work out. And so you noticed when the tariff stuff happened last year, the market was going blood red. And now when the Iran stuff's happening, it's going green. And so people have basically decided Trump's not a risk to Wall Street.
right.
So they're underwriting that to basically zero and saying whatever happens, we know he's got our back on Wall Street. That's what I think is the mindset, right or wrong. That's my current.
Do you think a piece of it might be like Chamath's take that he seems to always have, which is that, where else are people going to go? It might sound good to go invest with China, but there's a lot of risk there. It might sound good to go invest India, but high risk, high reward. Like, might sound good so do you think a bit of it is also like things aren't good, but where else are we going to go with our money? Because our new, a lot of these people, they're selling businesses, making money. They have to put the money somewhere. They're SpaceX, tons of people became billionaires there. They got to put their money somewhere. So is it a bit of like, it's the best of, like it's the best we can do with what we got?
Slight tangent question. I mean, like, I've got a slightly controversial opinion, which Americans typically won't like, but America's at a point right now under Trump, and I was pro-Trump in his first term, by the way. I've just not been pro-Trump this second term. Like, I just think he's gone a little bit headless, but he's driving America towards becoming a closed economy where only Americans will buy from Americans. And there are countries out there that have been huge supporters of America, Brits included, that are like massively unenamored by the prospect of the US. And that's a big signal, like across global countries where they'd rather collaborate elsewhere. Like now, 5 years ago, America was seen as the holy grail for a startup to expand out of the UK. Like you could achieve $1 billion status in the UK. To go to 10 billion, everyone thought it was America. Like that's where we have to go. People aren't talking about America. They're talking about going east.
To where?
Was that a Monday plug?
No.
Sponsored by Monday. The biggest company in Europe.
We're listed on the New York Stock Exchange. That's the Monday plug.
But where do you go? East to, you're talking China, India?
But you just go for more volume of countries. It doesn't have to be one specific country. You just go for a larger volume of countries versus one country.
And so my point is there's a risk there, right? So people might be trying it, but the real money, the big money, the non-startup money is smarter than that. They know one Ukraine type of situation goes off and those countries stop buying, right? One China decides one thing, they stop buying, or they recreated it and made their own version, stole your IP, there's a lot of those risks out there. And I feel like that's the Chamath take is like, yeah, it sounds, what you're saying sounds right. And sounds like that's what you're seeing. But the reality is the people, the big money, the people with, a ton of assets, they're not going to do that because they know it's too risky. It's too risky to do that.
Can I make a continuation of Lance's point, and then let's have Ben give us thoughts? Chase, what you say makes sense if U.S. stocks were the only ones going up, but everything's going up.
Okay.
UK stocks, U.S. stocks, Chinese, everything's going up.
Japan,
and so I think it kind of goes back to this point of there's just so much money in the world right now, but it's not being evenly distributed. So yes, the wealthiest people have an insane amount of it and they're putting it everywhere. So when you say stuff like, Main Street in America, wage growth slowing, I think that's a discrepancy. It's like everything's going up, but clearly not everyone's benefiting. And so I don't know if it's an America global thing as much as it is just like, I think it's a money system thing. That's not a complete take, but what are your thoughts, Ben?
Yeah, to that point, the wealth gap is really widening. Sorry, my light went off here.
This light just you don't have clap on lights in there? Come on.
It's definitely easy to see that the wealth gap in America is widening.
Ben he didn't pay his power bill because the wealth gap's widening. So
yeah, like wealthy people are just getting richer and richer, and the majority of Americans are just kind of getting poorer and poorer.
But I don't want to. Okay, Hemant and Chase, do you think that that's always been like that, or do you think that's more of a mindset perspective shift? What Ben just said that.
Go on, Chase.
Both. I do think it's always been that way, and it's always easy to point that way. Every generation can point at that and be like, "Oh, look, the rich are getting richer," and that's how it seems. But I also feel like there's a lot of fundamental things that are wrong in the U.S. right now that are causing that issue as well.
Mm-hmm.
But see, that's where I go back to H's take, where I'm like, he's siloing not that piece, but what Trump is doing. The problem I have is when things aren't going well, you have to do something different, or else obviously that's insanity to keep doing the same thing and expect different result, right? yet no one wants Trump to do anything different. So then you're like, okay, how are we going to fix education and all of this stuff unless we go straight socialism and everything just becomes free? How are we going to fix everything if we don't do something different? And I think that's what we're in the middle of right now is he's trying
Alpha
to fix.
schools, baby. Alpha schools.
Yeah, that's right.
That's not a
He's
paid
trying
buzz for it.
he's trying to fix things
What'd you
that
say?
are big ass boats, big ass things that are hard to fix. And so it feels hard and feels weird and feels like
Wait,
everything's
who are you
against
talking about? I missed what Hemant said.
Alpha Schools. It's a private school. It's a private school that we've been talking about.
The one you are creating?
No, it's been out here. I'm on the board of like their charter school in Arizona.
Uh-huh.
Um,
But they teach trades, mechanical trades and stuff like that.
no, they do a good job of basically the crux of it is 2-hour learning. So like you can get your math, science, English, all of that in every day in 2 hours.
They don't
And-
believe that you need an 8-hour day or
And so like normal school, you don't need all that time. So the rest of the time they're teaching things like stocks, business, you know, if you're into trades, it's basically about what interests you and how do we help you learn about that and get closer to that interest.
Amazing.
It's really,
And also,
really cool.
any
It's-
interest you have, the building blocks are math, science, social, so history. So you're using that stuff and learning it anyways. That's amazing. All right. Sorry to cut you off, but that's amazing. I love that.
Yeah. Anyway,
yeah.
I think my point with the whole piece on the Main Street is
Mhm.
that I feel like there's not necessarily this grandiose plan, but there's plans to fix things that are causing that issue, that gap to be there. And I think we're working towards it more than people give credit to. And it doesn't feel like it right away, but when you're trying to turn a big ass ship, you don't just take a quick left. And I feel like that's happening.
I think that's a very good perspective. Yeah. Hemant, what do you think to that?
Real quick too, it's also
Yeah.
the easiest time now to become a millionaire ever in history. So like,
But is
to
that
your
because
point,
of Trump or is
it-
that circumstantial because of AI?
no, that's not Trump. No, I'm just saying in general, the wealth gap widening, it's also the easiest time to become a millionaire.
Yeah.
Even not a smart millionaire, even just a dumbass YouTube star, right? Like all the way to like the AI entrepreneur. So like all the people, the gap widening, the people at that lower half or lower, whatever you want to call it, have the best opportunity to leapfrog everybody into the front right now.
What do you call the 4 friends that can't even get 100 views that are below the YouTube?
The dumbass YouTube wannabe stars.
Just friends. That's what we call them.
Just
We're calling them
on a
friends.
Zoom call. Yeah. No, I
We're
think
not
those
here-
are great points.
We're
Hemant,
not
what do
here
you
for
think to
clicks
that?
and likes. H.
Yeah, Hemant, what do you think to that? Those are good points, Chase.
It's funny. Yes. So obviously, like a lot of us, what we earn, like in the UK, if you just take from a salary perspective, according to data and stats, my salary puts me in the top 1% of UK earning, right?
Woo!
But
look at that big ship.
I mean, the bracket to hit that is I think like £125,000 total.
Mhm.
earn. Now, if you live in London, you don't feel like you're top 1%.
No.
You feel as though that gap of those people that are really living the high life, the real wealthy, are just on a different planet to you.
Mhm.
But yesterday, I had a client meeting at this like kind of factory HQ in an area called Stoke-on-Trent. It's like going out to a redneck part of Texas. Okay, like it's that equivalent.
Mhm.
And then when you drive there, and when you have a conversation with a taxi driver there, you realize you truly are top 1%, because 99% of that country lives like that. And yeah, actually, that is a good point. That 0.001%. That is a good point.
What did you say?
In the chat.
No.
Sorry, I didn't want to cut you off.
No, I do agree with that. Social media does make people think.
Yeah.
Social media
I
does
said
make
hot take. Social media made people think the top 0.001% is the top 1%, meaning we feel like living in the top 1% is not enough. We should be in the top 0.001%, having a wonderful home, having, you know, a job, having, you know, a roof overhead, food in the, you know, food, a beautiful family. That's not enough anymore.
Yeah. Yeah.
So that goes to the idea that the mindset shifted.
Yeah, like are the wealthy is the you know, Robin Hood, like rich poor divide really growing, or is it just more accentuated? You know,
Yeah,
you could argue it's more accentuated.
I think both, but based on vibes and feeling, it's accentuated way more, like by the mindset.
Yeah.
Go ahead, Trump.
Well, I was just saying to Chase's point, there is no better time and easier time to become a millionaire in this country if you know just like the basics of investing and can put money away and into an S&P 500 ETF.
Dude, how about the Trump accounts? Like I listened to what Gershner explained. Of course, he explained it a million different times, but one time it made me feel like, oh, they got something here, which is kids will be talking about it because they're in the game, and they'll be literally like 12-year-olds looking at them and talking about stocks, which is not normal, right? And things that they do, and that will start to teach these kids in good part of society, bad part of society, like how they can invest and how they can create long-term wealth and how they can do that. Like that's like a little secret, just little thing they threw in there. Like, yeah, we can't really change the education system overnight, but if we do this, it'll change itself. In a sense, in that little small, narrow window.
So both of those points you've made in the last 20 minutes are about kids having a better education in some manner, which I think is a very valid, critical, fundamental flaw that we have right now, for sure.
Agreed.
This goes back to one of my earlier points where I was talking about, I know this is now going off on a tangent, but it's connected to what Chase said. Like, do we think the next gen of kids coming up, Chase's kids, my kids, like, are they going to need university, college?
No,
of course not. Of course not.
Just send them to Draper.
Yeah, no, but really, we got more out of 7 weeks and at what, 1/20th the price in 1/20th the time and 1/20th the price, and we got 20x the value. That's a 400x return.
If we would have actually taken the advice, some of the advice and things that we learned at Draper, like what was Bitcoin then? $200?
Right.
$170.
And we all thought Tim was crazy. I followed Tim's advice and I bought it, and it doubled to 400, and I just sold it all. I was like, well, that was good.
You're right. We were exposed to the future 100%, and we did take advantage of it, but you know, you can't always take advantage of everything. You're right though. Yeah. So that stuff is what kids need for sure.
So I think like a bit of like a Shark Tank moment, but like, I think one of that the next big opportunities is going to be Trump.
His light keeps turning. Ben, does your light just turn off all day?
It's motion activated. So if I haven't moved for 5 minutes, it turns off.
So green.
So green.
Your boss is so wealthy he won't spend the extra like 4 seconds in power. I love that.
The city of Boulder like requires it.
Oh. What do you mean? In all commercial buildings?
And yeah, all newer commercial buildings. Anytime you pull a permit, you're doing electrical. for a commercial space, you pretty much have to do these lights in
Yeah,
order
it's
to permit.
Arizona's like that too. I don't think it's as strict, but there's like it's like more of a what do they call it? A dark, not a dark state, dark sky state or something. So
Oh, cool.
it's like outdoor lights and stuff like that. They're trying to like your whole property can't just be lit up all night. It has to
Mhm.
like have motion, have the dimmer lights, whatever they call those. But anyway,
Well, and the
H-
municipalities aren't making it easier to do business on Main
No.
Street, as I'm sure you're all aware of, like the permitting process, everything that a small business has to do just to get their door open in this town. It's making it just unreasonable and unaffordable. And the cities are so slow, and that's across the whole country for the most part.
Isn't that the same pattern we're talking about? Where if you have a lot of money and if you have access to a lot of money, you can get the stuff you need done. You can
Yep.
get the permits you need.
You can make one phone call
Yeah.
to the mayor and get your permit expedited if you
Which
know
I have
where-
no problem with, but just also let everyone do that, for some incentive.
But if it's a mom and pop couple that's starting a restaurant, they could be in the permitting process for over a year. We've done deals just in the past year where we give a business free rent for their build out, and they pretty much declare bankruptcy before they can even open.
Because they never got up and running with permitting.
Permitting, and then just all the red tape and hoops they have to jump through to start their business. It's really expensive to like start a business nowadays. It's in like the brick and mortar space.
and it's mostly time, right? That takes them out. Because if they could get up and running fast, they could probably get some revenue, make some adjustments, right?
Time and construction costs.
In construction costs.
Good
Chase, how's
question,
like the
Chase.
permitting process for data centers going?
What you can expect, but Arizona is a lot more favorable than a lot of places, so it's not as bad. They're doing a good job of like pushing people into the industrial sector zones instead of just like any piece of land with they have a good growth plan. So if that growth plan doesn't really marry well, they're pretty quick to say this isn't happening. But in these industrial parks, industrial zones, they're pretty quick to approve them. Obviously, they've been good. They've been hearing the pushback, and they've been good with adjusting on the things like the water, the power, all of that. But the problem is they're not in Arizona. The problem with the industry is most people aren't doing what Arizona's doing. It's very common sense. There's no issue with water. You require closed loop systems. Okay. So they fill up their system one time. That's it. No data centers being built with some system that constantly needs water. So the fact that anyone thinks that that's a piece of the puzzle and not just like going quite right past that right away by requiring closed loop is crazy. Electrical is a lot tougher to get energy. That one they're doing, in our state, they're doing a good job of requiring, to pay your way. Basically, either you have to provide your own power like what we're doing, or you have to basically pay for transmission with APS for future power. Because the hard part is, I don't know if you guys know this, but in electrical, the hardest part is transmission. So creating the power is not hard. Once you get the power to a local area, it's not hard to get it to these different businesses. That's easy. It's taking from a giant power plant all the way to that area is the hard part, because they're crossing swaths of land. They have to do the high wires. So the permitting is tough federally. Even if they were to expedite that, they still have to go through people's land and say, hey, eminent domain, we're going to take this. Here's a fair price, negotiate. and they're doing that across thousands of people's land because they're going long distances. So the generation of it is one piece that's fixable. It's easier. It's not as big of a problem. It's a transmission of getting this giant amount of power to an area that can then take that power, reduce it, and distribute it. So Arizona, we've been in the growth phase for a while, so I feel like our utilities are doing a way better job than most. But they're kind of in this boat of like chicken and the egg, like, hey, we only have so much plan for transmission. And it's like, I want it. Okay, well, then you're going to have to plan for more transition to be built in. And these data centers are saying, okay. And then that way they can start the transition of bringing more power to these spots.
Yeah, we own 7 square miles of land south of the Denver airport.
Mhm.
And we actually just got a letter of intent from a data center company to build a data center there. But
Well, let's talk about it offline.
yeah, the city of Aurora just put a moratorium on data centers. I don't know if you. It's
Yeah, no, the only thing we did out here is the governor, who's very, very left, did a moratorium on the tax credit they were giving. So they were giving a tax credit for all equipment. So the billions of dollars you spend on these racks, you would have been tax-free. Use tax, at least. So it would have saved tons of money, but they just got rid of that. They put a pause on it, I should say. So
And that's across your county
Arizona.
or all of Arizona?
Arizona, yeah.
That seems like a huge deal. You guys were the leader.
Yeah, it's not on the industry. It's just the tax. And that tax is not, it wasn't, that tax was put in place to incentivize technology to come here. And so I don't think they really need that incentive anymore.
Oh,
It sucks that she did that, but it's not needed. It's not a big deal.
good take.
But back to the permit process, like I feel like Arizona's done a real good job at adjusting. And that's why we're getting these businesses. I mean, TSMC has changed the game in Arizona, and they're building more fabs, and they're going to become the hub of the country until TerraFab wipes them out. But they're going to be the hub of the country of chips for a while. And so our state has seen, if we keep doing what we're doing, we're going to keep attracting people. So they haven't made these giant adjustments like these other states are doing and slowed things down. So it's been nice to see good growth. Come to Arizona.
Should we jump into like your thoughts on the market and what sectors are you buying in? What sectors are you selling in?
Talking to me?
Yeah.
Sure. All right.
Let's see.
He
Let's
wants
get the
to.
hot take. Well, I think Chase's point, like I just saw Anthropic did what was like I don't want to say the wrong number, $8 billion deal with Riot. Do you know what Riot is?
No. Riot House, yes.
Yes, that too.
I think I was in bed when you guys went there.
Right. Yeah,
are.
you were for sure.
$9.1 billion agreement with Riot Platforms.
Oh, that's right.
This was this was a Bitcoin mining company 5-6 years ago. So, I mean, that's clearly happening in stocks. I don't really have a position on that because it's too in favor, but that's crazy that's still happening and still it seems like it's still accelerating.
The reason they're doing that, it's a Bitcoin mining company, so they already have the infrastructure for the data. So all across the country, people are getting pushback, moratoriums, all of that. So they're paying a premium to snag the available space now.
Yeah.
So that's why we're going to make a ton of money in Arizona with data centers.
We hope you do. Then we can afford better microphones and cameras.
Yes,
I think. Yeah. Ben, I think the Iran stuff I hardly paid any attention to it when it first started. The first like 2-3 months, I basically didn't pay any attention to it or underwrite the risk that much. I just didn't think it was relevant. And my theory on it was that Trump was just doing this as a way to basically prop up the oil and gas industry in the U.S., which if you think about the world from a mercantile perspective, where it's just like kings, queens, and it's way more Game of Thrones than we give it credit for, which I think is probably my take on the overall world now, is that things are way more Game of Thrones. Then I kind of think it's a smart move from the perspective of we now export more natural gas in Saudi Arabia. That happened this year. It was at 0 in 2016. So in a decade, we went from 0 to more than Saudi Arabia natural gas. And I think our oil is comparable, if not more now as well. So, and I don't think here's my hot take. I don't think this was a Trump
Venezuelan oil.
Huh?
Venezuelan oil.
I think that this has been in the works for a long time, probably a decade. I think it's crossed through many presidents. And the moment was like, when do we go in, disrupt the flow of oil and gas so that we, as the number 2 suppliers of the world, now become number 1? And let's just fucking leave it a total mess. Who gives a shit? Because we'll just sell as much as we can. And then also going back 2 years, the natural gas Nordic pipeline from Russia. What was the one that we blew up? The Nord Stream pipeline, right? That was a massive natural gas pipeline that I believe goes to Europe.
We didn't do anything.
Yeah, right. We didn't know. That's what I'm saying. That was a different president. Same effect. People buy more of our shit, but different president. So I think it's a Game of Thrones. I think we're here to sell oil and gas. I think if you look back in the 1970s when we went off the gold standard, I think it was Nixon who basically decided, okay, we need to figure out a way that we can stabilize the dollar right now. And so what we're going to do is create the petrodollar and give it some sort of underlying thing. So clearly, I think that this is just a evolution of what America's been doing for 100 years. And I think, so I love ExxonMobil. I love Cheniere Group, which is a LNG stock. They're the number 1 exporter of LNG. I love anything in that area, not because I think I know what's going on with the Iran conflict, more just because there's no way you can tell me that they should be trading at the same risk premium as they were a year ago. We've now had two things happen in 2 years, Ukraine and Iran. It's clear you got to buy stuff from the U.S. if you want stability in your supply chain of oil and gas. And then cherry on top, Trump comes out 3 days ago and says they're making too much money, which I think he knew what this was. I think this is his way of saying you're welcome to them, basically. So that's my hot take on it. I don't know if I'm right.
Are you partaking in the AI investing side, or have you called it quits on that?
No, I look at everything. There's a company called TaskUs that so they manufacture the data sets for robots and for self-driving cars. So they have 50,000 employees that are lower tier paid employees, which you think is not valuable in today's world because everyone's getting replaced by AI. But actually it's very valuable because what they're doing is they literally have kitchens, build kitchens in their office. They build warehouses, they build stuff, and then they have these people go through with gloves on and glasses and create the data sets that's needed for the robots. So they have 50,000 people doing all this AI enablement stuff. It's kind of like a young Accenture. It's founder led. The founders are best friends. They've been best friends since childhood. Love that one. And it's trading at a fucking. So its largest customer was Meta. I think they're not transparent about it, but they keep saying at large social media customers, their number 1 customer. That's been going down the last 2 years because I think Meta's moving to another company called Innodata. And Innodata does something very similar. They were ahead of Task. So Task was losing their top customer, but it seems like that's gone down and revenues enough to offset that. So their AI business has grown 25 to 35% for 7 straight quarters, and it's going to become, the largest part of their business. This is all off the top of my head, by the way. Yeah, so I like that kind of concept where it's like a beaten down stock that has absolutely no like, oh, they're losing Meta, it's garbage, let's trade it at an 8 PE. Meanwhile, go to their website, it's like the most new age AI tech, training data sets you can get, blah blah blah. So
Are you going to bet against Tesla, Terafab?
I don't actually, I know enough about it that they're trying to build their own fab. I've seen the like contextual sizes of the building versus all the other factories in the US. That's about the extent of my knowledge. So they're going to build, they're going to be at TSMC.
Yep. And the thing about it is I don't even think it'll disrupt TSMC's business, because they need, just with SpaceX and, XAI, and then the data centers and where things are moving technology wise, the need for more of those high value chips is going up, and that's what they're trying to capture. I mean, of course they could take more business from them than just that, but
so I have a question. How come NVIDIA doesn't do this and fully integrate themselves? Like, why would NVIDIA not do this? Why is Elon doing this?
I think it's a totally different technical set. Like, to create those, it's a totally different, like, manufacturing.
Right.
Even though it might seem like the same, it is so different. And so that's why TSMC has the moat they do. And so, I mean, it feels like Elon or the entire Chinese government are the only ones that could do it.
So that's what this is. Elon is saying, I'm hooking my cart to Jensen. Jensen's saying, I'm hooking my cart to Elon, and he's going to build all NVIDIA chips in 20 years from now.
Guaranteed.
When do you buy SpaceX, Don?
If that all comes true, there's basically no bad time to buy it, as long as you can stomach volatility. But obviously as low as possible. But I mean, it's.
But then, do you buy SpaceX or do you buy Tesla?
You buy Tesla now, they're going to merge at some point.
Yeah, they are going to merge.
That's what I think, Chase.
Wait, but is
Tesla, just with their robots, is going to be.
But who owns the factory? It's SpaceX, right?
Yeah.
Yeah. Okay.
No, actually, Tesla does. Tesla.
Well, they own Gigafactory.
That's
Well,
what I
who
thought.
owns
Terafab is
Terafab?
Tesla.
Tesla.
It is.
Yeah.
Yeah.
Oh, then Tesla's for sure the one to own. Yeah.
Yeah. Yeah.
And the robots? Oh, wow.
Yeah.
Dude, Elon is something else. What the fuck? It's
I
crazy.
know.
Yeah, but do you know the single biggest risk to all of this is Elon dying?
Yeah.
Of course, it's single man failure.
It's the single biggest risk. It's probably, I would say, the most heavily weighted risk in any company in the world.
Probably.
In terms of, if Elon dies,
It goes to
I'm
zero.
not sure who should.
Yeah, it goes to zero. I'm not leaving
Yeah.
my money there. Yeah, okay. Don't say that. Knock on wood. Elon is doing great things.
We've seen
How does a guy like that even think about that problem?
I'm sure he's an alien. He has to be, dude.
Yeah,
Neuralink.
he's like,
No,
I won't.
Neuralink.
Yeah, this is his side project, Neuralink. We didn't talk about it. Yeah. I really, truly think it's not that crazy that there is some sort of intergalactic species out there of humans that escaped Earth from a natural disaster or some sort of nuclear disaster like 1 billion years ago, and that have been waiting to come back and like catch us up on technology that we used to have without overwhelming us. And I think he was like the dude that was sent to come do it, because there's no other way you could do this.
So you think Elon's the Messiah?
No, just
If you look in now we're going on a tangent, but there's a certain trace after a nuclear bomb goes off that you can find within rock sediment, and it's not Earth made, it's only man made, and they found it in the rock sediment from like 1.7 billion years ago, and they don't know how it got there. It could be from outer space, but they don't know where else this exists in the outer space. The only signs we know of this molecule, whatever it is from nuclear reactions. I think there's a decent chance that we had to leave this planet and come back. What's up?
Hello.
There's a little alien. Hello.
Just
How's your
waking
camera?
up.
Wait,
What's
how's your
up?
camera? Oh, okay. I don't know. Anyways, no one's in on that take of Elon and alien.
I believe in aliens. I'm not sure Elon's an alien.
I don't know. I'm gonna say no if I had to bet it on that one, but I'm not a betting man.
I know Ben in the accountant office not betting on aliens over there.
Don, whenever I make a bet, I just do what you tell me to do.
Those have worked out.
It's worked out.
Dude, NMM is really ripping.
My investing strategy is everybody always says buy S&P 500, and that's been my strategy, and that has worked out very, very well. And then buy whatever Don tells me.
Okay, well, I'm telling you,
That's my fun money.
you guys convinced me today to buy Tesla because I didn't realize that they own the Gigafactory.
Ding, ding, ding.
Yeah. So, okay, so Trump, we'll do this as the last thing and then we'll sign off. So then if you're going to buy something like Tesla, I think you got to go in at, you got to do it on technical indicators because it's too hard to do any sort of fundamental analysis on it. This has been the most helpful technical thing I found. Have you ever done a Fibonacci retracement? Lance Roberts taught me this one.
I've heard of it.
Here, I'll show you. So you know the Fibonacci sequence, you're familiar with it? It's like a common numerical pattern history for all the viewers that don't know it and or in nature. And it's like the way that flower petals are spaced out and things like that. Okay, so you can see here, if I do this Fibonacci retracement, it's basically gone straight down to this 38.2, which is the first, call it standard deviation or whatever they call it. I don't know the jargon. And you can see it's exactly stopped right there. And so the way you do this is you take this top line and you drag it to what's the highest point within that range. So you drag it to the very top of this or here, somewhere around there. You see that, what I'm saying, right? And then that automatically disperses it according to like human nature or just nature in general of these are typically the patterns. And it's pretty consistent, I've found. So what it's saying right now is it's at the point where it's either going to decide to go up or down because it's clearly stopped directly on this line of 38.2, which means all the robots that are trading this are also looking at this exact same number and trying to decide, are we bullish or bearish? And if you're bullish, it's probably going well back up to the 0%, if not higher. And if you're bearish, you're probably dipping down to this line, which is a price of 256. So like basically, the way I would think about this is, between today's price, which just happens to coincide almost, well, no, it's 330 today. So I would look at this and I would say between 250 and 300 is when I would want to accumulate this just based on technicals. And then 61.8, which is 200 a share, which like something would have to go really wrong in the overall market, but it's possible, would be like the back up the truck moment. Let's go.
But then according to this, if it goes bull and it goes to 450, 465, 475, do you miss that window? Because according to this sequence, you're not going to get that aggressive a dip again.
So if it
Yes,
does
you
go
miss it.
up, it won't go back past the 300 is your point.
Well, so the way that
What I'm saying to you is if you don't buy in 250 to 300,
you miss it.
Yeah.
you miss it. Then you're not getting in.
But look, so here's how I would think about that, Hemant. I know it's very tempting. And by the way, I'm okay with missing stuff now. I had never been okay with missing stuff until the last, call it 10 days, 2 weeks of my life. But so if the top end price of what we're saying here which is like, you can see, like, look, the top of this right here is this 300 to 310 range. This is the same thing. Like it all kind of hovers around this line. So it's a fair estimate that 310 is the upper quadrant of it, or the upper limit. And so if you're at 330, that's $20 higher on a $330 stock. That's what, 6-7%. So basically, I would just wait. I mean, this is so volatile, and with midterms and Iran and all this stuff happening, you're gonna get some sort of thing in the next 2 months. I don't think Tesla's gonna like jump higher, but if it does, then yes, you miss it. Or what would happen is it would go back up to this 497, call it 500, and then you can see it did that here. So it got rejected by it and went down. So you can see right here, it goes to the top of this. It goes down to its Fibonacci retracement of 50. You see how it stops somewhere around there, then shoots back up to that 0, gets rejected, and now shoots down to the 38 Fibonacci. So that implies it's kind of jumping up and down in its Fibonacci. So I mean, who knows? It's all witchcraft, but I would
So
wait.
also is another way to summarize a little bit of what you're saying is it's not going to just jump up overnight on the way up. It's going to take a while to go up. So before it does make that jump up, your prediction is more like something will happen to temporarily bring it back down. Then you can buy and then hopefully share in that ride up. Is that a little bit of what you're saying as well? Of being
Yep.
patient for your price?
Yes, be patient. But the counter argument is, if you see this line I just drew,
Yeah.
this black one. So like the counter argument is there's a clear trend of higher lows that's happening,
Right.
where this is a low, this is a low, this is a low, this is a low. And you can see how they're all going and bouncing off that exact same line the whole way up. So that would tell me right now, considering it's on the 310 marker and it's more or less on its upward trend line, it's probably not a bad time to buy it now. I'm not gonna, because I would want a better deal. And frankly, I would wait till it gets down here to 250 or lower. But I think if you want to own Tesla and you're okay with the risks, this is like as good a time as any if you're gonna buy it here and try to sell it here. This is not financial advice, by the way. But that would be, I think, what I would do if I was gonna do this. I'm just not gonna do it because I don't like that kind of style.
Is your play, it's, let's say it dips tomorrow down to 250 and you buy, when do you sell?
So look, there's never been a bad time to buy. When it gets to this line, you see that here, it hit the line, then it shot up here, you would have sold here. Here it hit the line, shot up here, you would have sold here.
So you're
Here it
selling
hit the
when
line.
you feel like you've hit peak.
Shot up here, sold here. So I would, yeah. So if this pattern continues, here it hit the line, and then it should shot up here, and I'd probably sell it at 485 to be safe. So I'd buy it 315 and sell it at 485.
All right,
Something
that's
like
what we're gonna do.
Should we do that as a squad just to
Yeah,
see
let's
how it
do that.
goes?
Yep. Lock it in. Ding, 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 ding,
I'm
ding.
not. We'll see. Okay. All right. Then we'll check in next week how it goes.
Wait, so when are we buying yet or no?
Huh?
No, 315.
315. Okay, hold on.
I think
Well,
I'm
get
not
it,
gonna
get
sell.
it, get it as low as you can get it. I wouldn't go over 310, but who knows? I don't know.
Oh, 310 now. Here we go.
Oh, that's
Hey, I'm buying now, and we'll check in next week and see how we're doing.
We know you're buying now,
You
Ben.
know you're buying
Yeah.
now. All right.
That's-
Wait, one thing I want to show you guys, then we'll hop off. This was fucking sick. Look at these two videos, or specifically this one. Okay. All right, last thing, and then we'll hop off. Anyone want to say anything while I pull this up? Any thoughts?
Looking forward to making money.
Yeah, me too. Let's get this day started. All right, ready? How fucking sick is this thing? Wait.
my god!
Bang.
Wait, watch it again. It blinds it with its claws. Watch this.
There,
Wow.
bang, bang.
You know that's a roadrunner, right?
That bird?
Yeah.
Yeah, Wile E. Coyote, Roadrunner.
Meet. Yep.
Wait, are you serious? That thing runs on the ground?
Yeah.
Oh, that's sick. Can it
We
fly
got
also?
'em. We got one that lives right by us.
Can it fly?
Well, they can fly, but they don't fly up real high. They just kind of like a chicken. They just kind of fly up to get to a spot faster or to get up in a tree or whatever.
Wow.
They
so
run around the ground. They
but
run around the
landing.
ground through bushes, through patches.
I guess that explains why it didn't fly away from the predator. That makes
Yep.
sense.
Yeah.
Cool. All right. If we don't get 1,000 views, then one of us has to sell SpaceX at a loss. All right. I'll see you guys next week. Good
Yes.
stuff. Bye.